For the month of January, I ended with a gross profit of $75,000 and a 25% win rate. Now, January was an extremely difficult month for myself. It felt like many days I was just hanging on. I had the wrong analysis, and it was very difficult mentally to get over certain drawdowns or a lot of other losing trades that I went through. Now, in order to get through losses or get through drawdowns and have successful months, we have to be honest with ourselves and we have to reflect on our trading. So in this video, I want to reflect on my month of January, the things that I did correct, the things that I did incorrect. I want to talk about the drawdown. As you can see, the first 2 weeks, I did not have one single profitable trade. So I want to talk about how I got over that hump and ended the month green. I'm also going to go over my risk management along with some very important psychology tips. So let's first talk about the 2 weeks to start January, because this was the toughest, it was the most difficult, and it definitely was the most mentally draining period of drawdown that I've ever endured in my whole 9 years that I've been trading. Now, keep in mind, this is to start the new year. This is 2025. We all have big goals that we want to accomplish this year. We want to make a lot of profits, see a lot of success. And in the first 2 weeks, I started the month essentially 0 for 13, which means I had 0 trades that I made profit on. And to start the month in the 2 weeks, I was down $47,000 in losses. This was the most difficult, mentally draining, mentally tough period, because imagine you wake up every single day and every single decision that you make for 2 weeks is incorrect, that failed. And not only did it fail, but I lost money on it. It's different if you fail and you don't lose money. But when you fail and you're completely wrong, and now your account is taking a hit and it's essentially bleeding, this is when it's very mentally difficult and mentally draining. Especially, I haven't had such a drawdown that I've ever gone through to this extent or this degree. Now, drawdowns are normal, but I realized that having not one successful trade in 13 trades is something that I've never experienced, and something had to be wrong in my trading. Now, when we have drawdowns or we have losing streaks, there's 2 main components to it. Number 1 is, are you making decisions based off your emotions that's causing you to act irrational, that's causing losses that are just going to amplify? Now, this could relate to, imagine, and be honest with yourself. Let me know in the comments that if you take a losing trade or you have a losing session, the next trade that you take or the next trading session, you try to make the profits back that you lost on the previous trade, and you force trades because you're trying to make the money back, and now you're just spiraling where the losses are becoming amplified and you're digging yourself deeper in a deeper hole because you're trying to make profits back. Now, I realized after these 2 weeks that that really wasn't my issue, because all the trades that I was taking in these 2 weeks had solid plans, had solid thesis, and they were all rational opportunities that I spotted in the market that just did not work out on me. Out of 13 opportunities, for one not to work out on me, I realized something had to be wrong in how I was analyzing the market or how I was executing. So if we have a losing streak or we have drawdown, we have to realize, is it emotionally based, or is it based off different market conditions? And looking at my trades and looking at my data, I realized that I wasn't executing properly, or I was using setups that would be best in a specific market condition, and the condition didn't fit how I was trading, and this is where the struggle was. Now, I'm gonna explain what I mean by that, but I do wanna say that drawdowns are completely normal. Drawdowns happen, and it's how you overcome them is what's going to determine your success, and if you could get yourself out of the hole like I did this month. The true only way that we can do this is by reviewing and dissecting our data. You don't need, I don't want to say you 100% need a trading journal to do this, but you need physical, hard evidence that you can look back to and look at, okay, the trades that I took last week were based off of these setups. The trades that I took the previous week were based off of these setups. And I can review the charts visually. That way I can understand what I did right and what I did wrong. Whether it's you write it down on a piece of paper, you print out a picture of your charts. You could simply print out your charts. I would recommend that. or you have a journal software that quantifies and shows you your trades, not only on a monetary basis, but also on a visual basis. Only way we're ever gonna get out of a losing streak or drawdown, or when we feel mentally defeated, is to look back at our performance and dissect it to understand common similarities of things that we should not be doing and things that we should be doing more of. Now, really fast, the process that I did was simply just go back to some of my trades and look at my majority of my setups. Now, what I noticed in these first 2 weeks of the new year, the market was in a downtrend. The market was putting in lower lows, and the market was also putting in lower highs. Now, in downtrending markets like this, it's best to short rallies or short pops and take profits at levels of support or take profits at levels of demand. Now, my biggest issue was in these 2 weeks, majority of my trades came from longs in a downtrend where I was looking to catch the bottom or catch a falling knife. The market would aggressively sell off. I would take the market long and it would fail on me. Here's another setup, the same exact thing. We would sell off aggressively. I would take the market long. It would sell off on me and I would amplify my losses, hold past my stop loss because I was basically trying to be correct or was not accepting the loss because I thought the market was gonna bounce. And here's another day. The market was in a downtrend. This is January 8th, $4,500 loss. And then the next trade was a $3,300 loss, all longing the market that day on a severe downtrend. So after these first 2 weeks, what I did was on the weekend of the 11th and the weekend of the 12th, I looked back and noticed what I just explained to you guys. I was using uptrending setups in a downtrending market. Now I must wait either for the downtrend to end and an uptrend to continue. And what I do in certain circumstances like this is I wait for the market to bounce off demand, form a higher low off demand, or create a new demand zone. And then I can start going to uptrending setups or more long reversal setups in when the market is switching trends. Now I have like different setups in different market conditions, and that's kind of what helps me with this. But I was so oblivious to this trend that we're seeing in the market that I really was not trading with proper setups. I was playing a lot of breakouts. I was trying to catch the falling knife, and those really just did not fit. And it came to me, and I realized this again the weekend of the 11th and 12th, and said, okay, something has to change. And if I don't change it, I'm going to continue the bleeding. So I did this by dissecting my data. That's the point I'm trying to get here. Now, the weekend of the 13th to the 17th, there was 3 total trading sessions that I traded around. Now, the first 2 weeks, I was down 47K. And then week 3 of January, I was up 61K off of just 3 trading sessions. And I only had 3 wins that week. And now my win rate end of week 3 is 20%, but now I'm in the green $13,000. Now I want to show you the setups that I took that really made this change. And again, the only way I could have done these setups is if I reviewed my data and see where I was messing up on. Now the 13th comes, and this was my first successful trade all month. And this was about half the losses I made back in one single trade. My risk, and I didn't mention this yet, but my risk per trade this month was around $3,500 to $45,000 to $5,000, depending on how much I really like the setup or not. So that's my average risk, strictly trading S&P 500 future contracts. My risk is around $3,500 to $5,000, that if my stop loss hits, that's how much money I'm gonna lose if I'm incorrect. This trade was a 4-to-1 risk to reward ratio, and by the time I sold, I got about a 5.5-to-1, totaling a $24,500 profit. Now, this is what I said about playing uptrending rules once the market starts shifting and gives me signs that buyers are present in the market. The first 2 weeks was longs in a market that sellers had control. Once buyers have control, there's a couple things that I look for to play more reversals and bullish positions. Number 1 is a higher low. So in this day, the market was placing a higher low overnight. Point number 2 is I wait for demand to form. In this example, the market was placing a 30-minute demand zone at an existing level of demand, which is point number 3. So we had 3 points there. The market's bouncing off demand, forming new demand, and placing a higher low off of that. Now, my scenario on this day was watching for a pullback at 58.23 to 58.18 on the S&P 500 futures chart, to get long, targeting a level at 58.46, which you can see on my charts here of this red line. Now, I don't want to get much in depth because this is a whole other video in itself. And if you guys want me to make a video on this strategy, just let me know in the comments because I could do so. I can make it my next video. But the basis to this, I'll just show you guys really quick, was why I was watching for a pullback into 58.23 to 50.18 to get long was by spotting buyers intraday. So this came around 9:45 is kind of where I made this plan come into fruition. And the real reason for this is because I am looking for areas where the market presented trails of strong, aggressive buying that caused the market to rally off of it. So if I were to mark a rectangle here where the buying really began at 58.23 and end it at 58.18 where the buying initiated from, this is a level that I'm interested in taking the market long off of. Again, I will get more in depth if you guys want me to do so in a full lesson just on this strategy. So the market dips down into 58.23 perfectly. We find support, and this is where I'm comfortable getting the market long at 58.23 for a 12 to 23 point target, and my stop loss was 3 points away. So about, again, 5 to 1 risk to reward ratio. The market directly after this begins to find some more bids, and then we get the push up perfectly into my 58.46 target, and this is where I exit my position for, again, a $24,500 profit, and this trade took about 20 minutes in my time. Now, this is really where things started to shift for me. As you can see, we were in drawdown of the $47,000. This first trade on January 13th brought me to negative $23,000, and then to end the week, I was up $13,000. And again, the following day, shifting to these uptrending rules, I took some more longs. One was a small loss, one was a break even, and then the third trade, which eventually won, was a $19,000 profit. Now, week 4 comes, I'm now up 60K in profits. My win rate is about 30%. I have now 5 winning trades and 12 losing trades and 3 break evens. My average win to loss is 5.4 to 1. And now my daily net cumulative P&L was once in drawdown is now double the size in green. Everything's going good. I have one trade that's a $27,000 profit, another trade that is a $21,000 profit, one and done setups. And that's another thing that I want to talk about. Now, looking at this, we notice majority of my winning days or my profitable sessions come from one trades only. I take one great winning session, I walk away from my charts, I call it a day, and I go enjoy the rest of my life outside of the markets and away from the screens. I think that's the best thing about the market is the money is awesome, but it's the freedom that the money brings and the freedom that we can have our time back once we really get the hang of trading. So I take one good setup, call it a day, and then go enjoy the freedom of the markets away from the screens. My losing days come from multiple trades trying to make the money back or letting my ego say, no, you're right on this. Keep trying it. You might have taken one loss, but let's try it again. Or let's try it another time. Or let's try it 4 different times. And now my losses compound. And majority of my biggest losing trading sessions come from 4 trades, 3 trades. And this is when it spirals because, again, I am trying to time the move properly. And it's just completely wrong analysis. And that was a lot of my trades was just completely wrong analysis because, again, I was using uptrending rules in a downtrending market. On top of all this, let's talk about risk management. My average win to loss, which I'm going to go to month start to month end, my average win to loss was 5.5 to 1, which means my average win was a $22,000 and my average loss was a $4,100. That's about par to my risk tolerance that I said this month, between $3,500 and $5,000. I had a 6% win rate and ended the month at the $75,000 mark. My day win percentage was, I was wrong more than half of the days and still came out green. I was wrong 75% of the time, yet still came out with a, I guess you could say, very successful and very profitable month. Now, it's hard for me to say that because it's all about perspective. This month was the toughest month. So what somebody is seeing, a great number that is I'm truly blessed about, it was a mentally tough month that no one could understand the thoughts that were going through my head to have this success. No one understands the I guess you could say, demons that were trying to influence my decisions this month behind the screens that I had to fight on a daily basis. And we all go through them. But if we block out this noise and focus on what's important, you can get out of a drawdown and have a successful month like I did. Now, the last month, week 5, I'm not going to lie, it was a very shaky start to the week. I took basically 10 trades and went 0 for 10 on the 27th, 28th, and 29th. Now, similar to the first 2 weeks, the three trading sessions in the last week was a struggle. Now, the last 2 trading sessions, let's talk about. Let's talk about January 31st. This was about a 5-to-1 risk to reward ratio, $4,500 risk if I was wrong, and a $21,750 profit that I was right on this trade. Now, similarly to that setup that I mentioned earlier, let's go to January 31st. What I was watching here was a bounce off of 61.30 to 61.24 to get long, targeting 61.45, which represents a level of supply on the 1 hour time frame. So the market forms this level on this rally up, and I'll just show you what it looks like on the heat map. Again, I'm establishing these levels through volume, and I'm establishing these volumes through identifying strong buying activity and then waiting for the market to retest this strong buying activity. We could see, if I were to zoom in here, some large trades hitting the offer, or very large green bubbles, which indicates large aggressive buyers present in the market. And this is how I came up with 61.30, and I drew it to the bottom of this level at 61.24. So essentially what I was watching was for this strong buying activity, if the market pulls back into that, the buyers would defend price at 61.30, which is this pink box, for me to take the market long, follow their footsteps. The market dips down perfectly into 61.30, where I find a great entry to get long, placing my stop loss under this low, targeting the level of supply above. And this took a little while for it to develop, and we eventually get that push up into the level of supply, and I take profits off of this great long entry by establishing where strong buying activity is. And again, this was a $21,750 profit, and this trade took, I want to say, about 50 minutes in time. And even my trading setup on January 30th came from this. This was a $24,000 profit. A 6-to-1 risk to reward ratio came from longing the pullback in an uptrend by spotting the large aggressive buyers on the rally up before that, targeting the level of supply or targeting the level of resistance. Again, if you want me to make an in-depth video on this, I could do so on the next video. Just let me know by dropping a like on this video and commenting if you do want that. Now, if it's not for my risk management, this drawdown would have been a little tough, because let's say I did have the first 2 weeks, which was like this, but if the following wins after this were, smaller wins, $1,000 win, a $5,000 win, then I would basically be getting myself out of the hole, but I wouldn't be getting myself out of the hole fast enough. I would need more wins to amplify it. I ended this month only 7 wins and 20 losses. So when you have risk management and you have trades that are 3-to-1, 4-to-1, 5-to-1, you could have a lower win rate. And I always will stand proud of my win rate, because a lot of people think win rates equate to success. I think this is a perfect testament of win rates do not equate to success if you focus on risk management. And this is why risk management is #1 priority, because our job is to not be right all the time. In fact, we can be right only 25% of the time, yet still come out with a very successful and very profitable month. When we have this risk management and we can rely on it, it's our structure, it's our backbone. Having losing streaks or having drawdowns still will suck. I won't lie. But they're easier to manage because we know when we do win, our risk management is going to amplify us, and our losses, because our risk management, will be more managed. Dissect your data. If you're in a losing streak, figure out what you're doing wrong. The answer lies in your data. Go through it with intention, and you will find all the answers that you need to switch up your trading. If you're in a drawdown or you're in a losing streak, let go of your thoughts, let go of your mind. The demons are going to eat you up. Don't let them. Focus on the present moment and learn from the past so it doesn't keep affecting the future. I'm going to end it all on that note. If you guys want, I would recommend following my Instagram. I'll post a link for it in the description below. Also, if you got any value out of this, I would just really appreciate a thumbs up and a comment. And if you're new to my channel, hit that subscribe button. But I'm ending it. Peace out.